Volatility. Is volatility a good thing? Is it a bad thing? We are being trained, and psychologically we are there to fear it. But at the end of the day, there are ways that you can use volatility to your advantage. Let's take a look and figure out what we can do. Hi everyone, my name is Mike Preto, portfolio manager with Hillside Wealth, IA Private Wealth, and today we're here super excited to talk to you about volatility. So volatility is generally perceived to be a bad thing, right? You know, your portfolio temporarily goes down in value, everyone's anxiety level goes up, and it's a very easy sort of sell, if you will, to say, look, let's reduce the volatility in your portfolio. And of course, we would all love everything to go up in a straight line and generate really healthy returns without any volatility. But the fact is, it's not really possible. And so what the industry's spent some time, a lot of time, and a lot of money doing is trying to find ways to reduce volatility to make the ride smoother. And that's all fine and dandy, but in reality, that costs money. Whatever strategy is being employed, whether it's buying GICs versus buying equities, or using options, or different strategies to smooth out the ride, that in the end costs investors on the rate of return side. So we want to reframe the volatility discussion and encourage people to look at it as an opportunity to make things better for you. So when you think about a portfolio of a concentrated portfolio of high quality businesses, you start to see, okay, we've got all these great businesses, they're operating at a really high level, they're generating lots of profits, the stock price has a strong history of going up and to the right. So where's the problem? Well, the problem is that sometimes these businesses get really, really expensive, and it's difficult to justify buying them because they're trading at such what we call high multiples. So whether it's a multiple of sales or a multiple of earnings, they're trading at really high levels. They're expensive. So when we go through a period of market volatility, what happens is these businesses temporarily go on sale, and that is the perfect opportunity to add to these positions and to buy more shares of these businesses. So we can think of this as three different opportunities, three different areas for opportunity when it comes to this. First of all, the business itself so if you own shares in a high quality business and we go through a period of market volatility, the managers of those businesses or the owners will do whatever they can to take advantage of that volatility, whether it's buying out competitors, whether it's buying back their own shares. They have different levers that they can pull to improve the quality of their business. So that's always happening. And then you have the opportunity to take any cash that you have within your portfolio and deploy it into buying more shares in these high quality businesses. And finally, the third thing that can be done is you can actually take fresh cash that hasn't been invested and add it to the portfolio. So by looking at volatility through this light, we start to see it as an opportunity. Now, of course, when it comes to volatility, we always think to the downside, but really there's a flip side to that, and that's the upside. So when markets are roaring higher and everything is going up and it's happy days in the markets, that is a great opportunity to reevaluate and look at what you want to do for you and your family. Is there a trip you want to go on? Is there a home renovation you want to do? Is there some sort of we call them dreams that you want to realize to enjoy life today while still being financially prepared for tomorrow? And if the answer is yeah, there are things you want to do, this is the time that you want to realize those dreams. You wanted to take money off the table in that kind of market environment and use it to accomplish dreams that you have today. So yeah, think about volatility in two dimensions. One is up, the other is down, and there's different sets of actions that you can do in each of those situations. So volatility is on your mind and you're not sure how to use it to your advantage or what to do when markets are up or what to do when markets are down. Book some time with us, 15 minutes. We'll go over how we use the volatility in the shares of high quality businesses that we hold inside our model portfolio for clients, we'll have a good discussion and you'll walk away with a better understanding of how to deal with it. With that, thanks so much. Have a great rest of your day, and thank you so much for listening.